Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. We have a ton to cover for this week. We are going to take a look at the 4 major U.S. indexes. We're going to take a look at the emerging markets. We are also going to jump in, take a look at the breadth readings in on the Nasdaq, and we're going to jump in, take a look at the metals complex, including gold, silver, copper, platinum, palladium. We'll also jump in and we'll take a look at oil as well. As always, if you like this content, please subscribe to our channel so you can see it on a weekly basis. Let's get right into it. Now, the S&P 500, we have been watching this resistance level right here at about that 3,330 zone, which was that gap down from February. And we are basically right there testing it at this moment. So this was that major gap zone that we have been talking about for quite some time. Well, here we are right at the top of it. A break above this would target that all-time high zone in there on the S&P 500. And above that, we have clear skies ahead. So what happens right here is very important. What I really want to note here, though, is we have, again, that difference between the Dow Jones, the Russell, the S&P, and the Nasdaq. They're actually very different in terms of where we're at from a resistance standpoint. When we look at the Dow right here, we're still not over the June highs, right? And we pulled up the S&P 500, we're almost back at those all-time highs, and we've closed that gap. Dow's gap's still all the way back up here at 29,000. So we're not having participation all across the board. When we look at the Russell, it's of course even worse. We are way off of those highs. And, we're still looking at a move. We need to get back up over about 1620 for it to be equivalent to where we're at on the S&P 500. That being said, we are right up at that 1550 zone. And as we have mentioned over and over again, those 50s are really important on the Russell. So 1550, 1450, 1350, we're right there. So again, any more push here kind of to the upside, and we would be looking back for those lows from back at the end of January and the beginning of that slide there in February on the Russell. Now, of course, when we take a look at the Nasdaq 100 index, it looks extremely strong. Here it is. We broke out of that range that we laid out for us last week, and we are continuing to head higher. So when we look at the Nasdaq 100, we look at this and we're like, man, things are super, super, super strong. But what I really wanted to do in today's video is I want to dive underneath the surface and look at the breadth for the Nasdaq as a whole. So first up, we'll take a look at that Nasdaq, we'll call it Summation Index. And we looked at this last time, I think back in June, and we talked about this resistance zone in terms of breadth is where we fell off a cliff in February of 2019. And what would happen up here would be really important. And we subsequently have failed and actually have continued to head lower. We're now below our breadth readings from the beginning of 2020, even though the Nasdaq's making new all-time highs. We've talked a lot about concentration of wealth inside the top 5 names of the Nasdaq, and this is just another way of taking a look at that. The index is being pulled higher by a couple of very large companies, but not getting the same level of participation under the surface, which is, of course, something to be concerned about. Now, when we take a look at the Nasdaq Composite Index and compare that against the percentage of the stocks in it that are above its 200-day moving average, we're only at 52% of the stocks are above the 200-day moving average. And we can look at this chart. It's very clear that we have a big divergence in terms of the percentage of participation in the Nasdaq versus where the index is because of a few very heavy-weighted big names sitting at the top. This is another concerning sign for me. This isn't just confined to the Nasdaq. It's also the S&P 500. Now, on Friday, the S&P 500 had one of the worst breadth readings in history on a day in which the index was up more than 0.5%. And so that's the data set that we're going to take a look at here today. And what we can see is in the past, and again, it's a small data set, but 1 year later, when the S&P 500 is up more than 0.5% on the day with a terrible breadth reading, we're only positive 33% of the time. 2 months later, 3 months later, and even 6 months later, they're all well below our average just against a random data set. So what we're seeing across not just the NASDAQ, but the S&P 500 as well, is we are not getting a full breadth reading and participation out of all of the stocks. if you look at the New York Composite Index, which makes up all the stocks in the New York Composite, we're still way down. And so this market really has been very split. We're down about 10% of the year on this. The market still has been really, really split between a couple of really, really strong names and a lot of weak areas of this market. And that breadth reading, the more and more it gets stretched, where we're just being carried by a couple of names, the more concerning it gets. So this is something we've touched on a bunch and we'll continue to touch on. Next, I want to jump in and take a look at the US dollar. The US dollar, and I'll back this chart out here on a monthly basis for us to take a look at it. We broke below that midpoint of this range that we've been trading in for the last 5 years, that 96 zone that's right here. It made a new low for the year, taking out the March lows there in the dollar index. Our next support comes in at 91, and then the bottom of that range is really at 88. The dollar has been under tremendous pressure, and we're starting to see a lot of the metals and a lot of the commodities really start to make some moves. Before I get into the metals and commodities, let's take a look at the emerging market itself. All right. We have talked a lot about this chart on the emerging markets, and right there at that 1100 zone as the potential breakout into that next range. And here we are right there. A weak dollar is a tailwind for the emerging markets and commodities as well. So if the dollar continues to stay weak, the emerging markets could get a nice boon from that. Now, we jump in and we take a look at gold. It is just running. It made a new all-time high, continues to fly higher. Almost on a daily basis, it seems like it's going up $20 to $40 an ounce lately. Silver cleanly breaks over 26, and we're now all the way up at almost 28.50 in terms of the price of silver. And a month ago, we were all the way back down in the low 20s, high teens. So it's just been an absolutely explosive move here to the upside. And you can see volume has really come in there as well. But it's not just silver and gold that are making moves. We also want to check in on platinum, which is pushing right into the key level of about 1,050 that we were talking about. Hasn't traded above that since 2016. A break over that would be a very good sign for that market. And palladium is starting to make a move once again. Now, palladium's just been absolutely incredible, partially because the automotive space started using palladium in their catalytic converters, and has really sent demand way up, and the supply of that metal is very low. But it is starting to take off once again. If we look at this on a daily chart, we based kind of around that 2,000 level, and we started to push back up. Last but not least, I want to take a look at copper. Copper is at a really important level, and we can look at this on a monthly chart there as well. And it's really like just under that $3 mark. It's had trouble getting over here for the last couple of years. Now, copper looked at as an industrial metal. A lot of times when copper is doing well, that's a sign of good economic activity. In this particular case, it might just be a sign of the dollar losing some value more than economic activity picking up. As we know, taking a look at the numbers, things have not really been good as of late. Last but not least, I want to take a look in at oil. We have talked about oil a lot. We've looked at this chart, this gap down that we had there in March. It was right there at 41.50. And as you can see, we had a line drawn on the chart here. And yesterday we closed above it for the first time. And we're kind of following through here today. So we have undone all this carnage from March and April. Have bounced back up, and now we're back above that gap down. So if that 41.50 zone holds, our next look in terms of oil here would be back up around that 49 zone. And then above that, we've got a little bit of resistance in at 55. And then, of course, the major resistance is really in that 65, 66 zone. So commodities as a whole, when we're taking a look at the metals, oil, even nat gas has started to make a move. Now, this, of course, has been beat up for quite some time, but you can see here over the last week or so, we have pushed up and actually broken above that 220 level on nat gas. So we're really starting to see some of these commodities make some moves. Of course, that could continue to be a function of a weak dollar. So we're going to continue to pay very close attention to this space moving forward. As always, if you guys have any questions, comments, you want to talk about the market, you have any questions from the videos, anything that you'd like to go over, please feel free to reach out. Tedeschi at Perspective Wealth Planning, or you can give me a call at 814-580-9881. I hope you guys have yourselves a fantastic week, And as always, I'll see you next week.